Good morning, good afternoon, and good evening, everyone. Um, just testing if everyone's able to hear me clearly. Hey, Mark, nice to see you here. Yeah, yeah, man, good stuff, good stuff. Is everyone able to hear me clearly? Nice, nice. Um, all right, thanks everyone for tuning in. Welcome back to our weekly live market analysis. All right, so yeah, let me know if you encounter any audio or video issues. There should not be any problem. I have I'll be scheduling a change in like internet provider soon, right? But at least now it should be fine, right? It should be fine, right? Last week was a holiday in Singapore, so Melanie was covering me, but I did share many of the views that I told her to share with you guys on the pre market weekly analysis. All right, so yeah, I think a couple of them work out quite nicely. Maybe the indices didn't work out very nicely, but the moves on DXY, the moves on Euro Dollar, a lot of them, I think even move on oil, right? A lot of them worked out very nicely, right? So we're back for another week, right? And we're approaching the end of the year, right? So things are getting interesting, right? Usually towards the end of the year, the market kind of slows down a bit, but I don't see that really happening this year. Yeah, at least I don't really see that happening this year. There's so much happening on the crypto front, on FX front, right? The markets aren't really slowing down that much, right? Okay, we have a request for pound dollar already. All right, I'll cover some pound dollar later. Okay, and what I want to share with you guys is that where is it over here? Where's my PowerPoint? Right. Yeah, in this webinar, right, we'll be covering the majors, the commodities, but also if you have special requests for me to look at certain instruments, let me know. I'll do my best to look at them. Right. I usually start on the 1 day time frame, but if you want me to jump deeper into the maybe the 4 hour time frame or something, I probably wouldn't go into the 1 hour time frame today because we have another webinar in about 13 and a half hours, right? Where we jump more into the day-to-day kind of setups, right? Today sets the tone for the week on what we can expect from many of the majors, right? And especially like dollar strength, what we are expecting for the week. Okay, Yuri and hey Joey, nice to see you tune in. All right, nice to see my usual, my usual crew, right? All here nice and early, right? Oh, well, depending on where you are, right? But I believe, most of you guys, it should be evening for most of you guys, right? Hey, yeah, nice to see you tune in. All right, yeah, if I'm not wrong, it should be evening for most of you guys. All right, so unless Joey's morning, is it morning for you? Are you in Sydney? I can't remember. Yeah, I can't remember, but yeah, let me know where you guys are tuning in from, right? But I do think most of you guys are tuning in from London and Europe, so it's about evening there for you guys. Yeah. Anyway, without further ado, let's begin. Disclaimer: remember that everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. All right. So yep, remember, yes, do your own due diligence, guys. All right, Adelaide. Joey, I will be swinging by Adelaide, with my wife and kid on the 25th, right, of December. Right, we're swinging by there for Christmas, 25th to 31st. I think she mentioned something about Kangaroo Island, right? If I remember correctly, although I thought the entire Australia was called Kangaroo Island. Nah, I'm kidding. Right, but yeah, I'll be singing by Adelaide at for the last week of the year. right? If you have any recommendations on places I should visit, all right, or happen to be near there, it'd be nice to catch up with you guys. Yeah. It's hot. What's the weather there? Right. I mean, in Singapore, we have about 35 degrees Celsius, right? So I'm not sure how hot it is in Adelaide now. Okay, yeah, Milu. Yep, I remember. All right, man. Hey Watson, nice to see you tune in, man. And Aussie Kiwi, got it. Okay, now let's begin today's session. Right, I'll chat with you guys along the way. Remember the agenda for today. Key news events. I tend to not really focus on them that much because it's covered later in the next webinar, right? About 30.5 hours. Analysis on majors, right? On the major commodities and FX pairs. We have some custom requests. If you have any custom requests you want me to take a look at, let me know. And yeah, let's begin. But just give me a quick second where I pull up my Bluetooth, right? So I got a mouse here which would help me. Yeah, I have a mouse here which will help me draw on the charts a lot better. All right, so I just want to make sure it's working. All right, it'll be a lot smoother one time. Yep, this is it. Okay, cool. Yeah, we got it. Let's begin today's session. All right. Oh, Christy, yeah, I remember. Romania. That'll be probably one of the places I visit. Yeah, one time to come. All right. I love the summer. All right. Interestingly, when I was in just a couple of I think 2 months ago, when I was in the UK, right, they were saying that they're having like some massive terrible heat wave, right, while I was in the UK, right, and I only realized it when I came back, and I was saying that, oh wow, that's weird. The weather, the hot weather there was so nice for me, but I didn't realize that the equivalent is that it's actually a heat wave, right? Yeah. So I hope for pretty good weather in Australia now. Now let's begin today's session. All right. So we jump to the charts. And jump to DXY. Okay. Big drop. So this was another call I was making. Right. It worked out pretty nicely. Right. But what do we expect on DXY now? Okay. Okay. Dollar's definitely weakening. But what can we expect? Right. I'm. Just let me adjust this over here. Yep. Yeah, dollar is definitely weakening. What do we expect on the 1 day time frame? Okay. Sorry, just let me adjust this a bit. All right. Okay. So yeah. If you have questions along the way, feel free to ask them. I literally have another screen open over here to answer your questions. All right. So don't wait until the end, because trust me, we never ever have time at the end. All right. I do want to highlight that to me, one of the key things is that DXY has broken this level, right? Most of you guys know that I call this the overlap level, right? And I do want to spend some time to at least, in the live trading sessions, like explain a little bit more about how I get each level, right? So it's not just purely looking at the levels, because it's equally important to know how to forecast these levels, right? Oh yeah, thank you, Watson. Right. Oh yeah, I forgot. Right. For those of you guys, I realize that some of you guys are new over here. Right. Introducing your host on who is taking you through today's session. Right. I kind of assume that everyone, all my usual guys are here. But yeah, if you are here for the first time and want to know who is this guy who is like sharing the charts with you, right? My name is Desmond. Right. So I run the award-winning research firm Everest for Entre Group, also Forex Army. Right. You want to find me on Instagram, right up here. I'm not sure you can see it. Comfy Desmond. Right. I promise I will accept your request soon, right? But it's pretty simple, right? It's a glimpse into my life. I mean, I do run let's say a trading firm, right? Very good traders, many what's the word for it, but my emphasis is always on the simpler life, right? I mean, I have a wife, a kid, I have a cat who is behind this monitor right now, right? But my emphasis is always on the simpler life, right? You know, you don't necessarily need all the flashy things, right? It's not about how much you make, you know, it's how much, it's how well you spend it and save it, right? So yeah, you know, it's if you want, you can always check that out. That's my Instagram, right? But anyway, yeah, so we're finalists of 2019, 2020, and 2021 for best FX and equity research, right? Prop firm trader, right? So we regularly work with many different kind of financial institutions to help them forecast where the markets are heading. But we have a special partnership with IC Markets. You guys who have been here for 2-3 years, you know the drill, right? And we bring the good stuff to you guys, the education, the life analysis, right? We dare to put our neck out there when it comes to the analysis, right? So I tend not to sit on the fence, you know. I at least let you know whether I'm bullish or bearish, right? So that, you know, it's actionable. We've been doing this for years, right? And we've stuck around for years because, you know, we're good with our analysis hit rate. I say it's about 70%. Most of you guys can testify, you know, it's about 70%. Some days we ever hit 100%, right? But I'll probably put it at 70% with a good risk to reward for live analysis sessions. All right. Okay, now anyway, let's begin today's session. All right, so DXY, right? DXY. Broken this level, right? What I usually like to do is quarters theory level. If you could send me a link to that, right? Maybe I can dig a little bit deeper into that. But I'm guessing you're referring to like Q1, Q2, Q3, Q4, right? The different quarters in a year, right? And their the behavior in the markets, right? Let me know, right? If there's a particular kind of theory that you're referring to. I'll take a look at them and maybe even update you guys next week if I cannot give you my insight on it this week, right? But if anything, I do definitely over the years, right? Q4 tends to be slightly slower. But what I have noticed is that Q4, just like the Fridays, right, tend to be like the Fridays of each week and the Q4s of each year, right, tend to behave slightly differently, right? And the reason for it, even for December, it tends to behave slightly differently. It's because on the last day, the last quarter, last month, right, what tends to happen, right? I mean, the last day of the week, like a Friday, the last quarter of the year, like we're in, right? The last month of the year, which is like December, right? The markets tend to behave differently because of it's just a very nature of human nature, right? Fridays are the most emotionally charged days, which I think is the same for December, which I think is the same for Q4. Why do you see such emotions, right? The charts might be wicking a lot more, the volatility might be more, right? Why does it happen in the last day, the last month, the last quarter of the year, right? And the reason for that is because, you know, the people who have traded well, they have you've felt it before, you know. If you trade well, you have a little bit more confidence, right? You are less hesitant on the trades you put, right? So the increased confidence and the increased recklessness, right, can cause you to trade very differently, right? Those people who are losing money, right, their New Year's resolution for the year, you know, I'm gonna make money, right? Those Q4, you know, those funds, hedge funds, you know, asset management firms, right? They're like, all right, you know, we need to turn a profit for this year, right? If they're losing money, right, and they tend to be more emotionally charged, trying to go for that win, right? So you tend to notice a little bit more confidence, a little bit more emotion, a little bit more recklessness when it comes to the last day of the week, you know, last month of the year, the last quarter of the year, right? So you just look at this, you know, last few months over here since October. Look at the kind of movements, right? Just this is just October, right? Look at the kind of movements compared, you know, to the previous few months. I mean, there are times when, yep, you know, that is driven by something, but the movements, you know, you can argue that the volatility is a lot more, right, compared to the stableness of the previous few months. All things being equal, of course. I mean, we have months this year where there's the war and stuff, geopolitical conflict, right? But it's worth noting that that's kind of like how it looks like, right? So yes, hey Leandro, good evening to you, right? And Fabio, yes, this is probably my theory for the quarters theory. I'm not sure if you're referring to it. Advocate is saying round number levels at every 250 pips. A simple way to say that, right? Oh yes, and if you guys have been following my forecast for the last few weeks, you know, we were saying that euro dollar push up to here. Once it breaks here, it pushes up to here and it's reached that target. So yeah, congratulations, you should have made some pretty good money, you know, once you've reached there, right? But yes, advocate, I think what you're referring to, most people would, there's a certain terminology, is called big figure, right? Big figure, like yep, you know, at the 1.1, right, the 1.1000, right? Even in some levels like the very auspicious Chinese levels like 0.888, right? Yeah, those are things that there are those numbers, right? Whether 0.888, right, there's 1 1.5 2 1.1, you know, these are big figure, right? In trading, we do look at them, right? There's a little bit more volatility and movement around there, okay? But let's begin with DXY first, okay? Let's begin with DXY. What do you expect on DXY? Broken this level, pound franc, I got it, right? Pound franc, and I got this level. So what I like to do, I always begin with highlighting the horizontal levels of my chart, right? It looks like it's easy, but it's very difficult to be able to pinpoint these levels, right? Why did I pick this level? Why did I not pick this level, right? Because if you pull this back, you know what I always draw it this way, right? Then I'll try to pull it back as much as possible and see if I can find an overlap, right? So over here you got pretty nice overlap, right? This one's a pretty nice pullback. Only after I drew my horizontal levels, that's where I start drawing my Fibonacci, right? So I got a Fibonacci over here, bottom all the way to the top. If you don't know how to draw a Fibonacci yet, guys, please learn how to draw a Fibonacci, all right? So most of you guys might have remembered that this is a pretty, let me set this as the resistance. Dropping very nicely, you know, we call the move here is dropping down to here, which is a support down here. Okay, this is my first support, right? This is my first support, and I cannot argue that this is my first resistance, right? It's important to be objective first. Don't look to force a direction yet. You know, you just look at it very objectively and see, all right, what are my key levels, right? I got a resistance here, I got a support level over here. It looks like price is dropping down quite nicely to my support, right? Is there anything else I can look at, right? Now the next thing, of course, is of course, you know, you could argue that there is something like you know, wave 1, right, corrective ABC2. You know, you could even see a wave 3 here before bounce, and a wave 5, right? For people who are interested in Elliott wave theory, right? But I will not dive too deep into that yet, because what we need to do after we highlight our resistance and our support, right, we then need to do the next thing, which is to go over to a correlated instrument like euro dollar, right, and see, all right, what in the world is euro dollar telling me? Okay, why is very simply because DXY and euro dollar, they move in opposite directions, right? So if one is approaching support over here, that means euro dollar should ideally be approaching resistance, right? So right off the bat, I draw a horizontal level. I do notice a bit of a resistance over here, right? And in terms of the support levels, it's a little bit hard to see. This will be the thing that you guys need to learn, right, when it comes to drawing support. See, when I draw a support level over here, right, you have to observe the way I pick the levels, right? This was where a breakout level happened, a breakout from here. I am a big fan of dragging it back, right? That means seeing how relevant this level is, right? So I drag it back, you know, this level here, there's a nice little, I try to go for the wicks, right? Meaning that I go for the level where I'm catching the wicks, right? So you can see I caught the wick quite nicely for the bounce over here, All right, caught the wick quite nicely for the reaction. Caught the wick quite nicely for the reaction over here. Okay, I then drag this further back. Right, I can catch a bit of the wicks over here. I can catch the wicks over here, and probably this is about as far as I can go. You will notice that once I click this line chart, right, you notice how nice, how it's okay, a little bit harder to see, right, because of this movement here, but it's very different from me drawing this, right. Look, you're like a sniper, right? You're trying to pick the line that goes in between all the little wicks, right, all the little wicks over here. You notice how the turning points are so nice around here, the turning points, right? That is what you're doing when you're trying to find the correct support level, right? So in this case, right, this would be my key support level, right? Some might stop over here, right? But personally for me, I think this would probably be the furthest you can drag it back. Yep, this would probably be the furthest you can drag it back. And this will then establish my first support. This will establish my first resistance. Right? Always begin by establishing your support and resistance levels, right? Then I draw a retracement from the top all the way down, right? And I start to see whether is there a key level. I'll always start with all fibs, right? That just gives me a good idea, right? And for those of you guys who wonder why we're not using the 38% retracement for the support, it's because the 38% retracement has been broken. You know, you have the starting point over here, you have your ending point over here, right? As price comes up, right? First time it reacted off the 23%, that's good, right? But then once it breaks the 23%, the 23% retracement is not valid anymore. Once it breaks the 38%, it's not valid anymore. Breaks the 50%, it's not valid anymore, right? So, right, what we have now is the 61.8%, which is valid, all right? So what we're gonna do, right, there we go, right? So I'm going to pick this, I'm going to draw the 61.8 retracement. Yeah, so the 61.8 retracement over here, nice level, right? If the levels are not lining up completely, you just highlight the area, right? Just highlight the area, because support and resistance exists as an area. It never really exists on the exact level, on the exact point itself, right? So we got nice resistance here, we got nice support, same as DXY. You know, we got a nice support down here, we got a nice support down here. Remember, these two instruments are correlated, right? Meaning that if one is on resistance, the other is on support. One's on support, the other's on resistance. I liked what I'm seeing so far. Okay, so you'll notice that this is one of the slightly different ways that I analyze the markets, right? Most people do finish an analysis on a chart before beginning their forecast. And why we're able to hit a 70% kind of hit rate, sometimes even more, is that we look at the markets in a correlated way, right? We don't just look at it from like DXY is going up, DXY is going down based on my analysis, right? We know that the market moves in tandem, right? And using correlation, you know, we know if I'm looking at a real strong level, support level, you know, is this same level, you know, is everyone in the market telling me that there's a reversal coming, or is it's like DXY telling me there's going to be a bounce, but euro dollar singing a completely different kind of story, tune, right? And euro dollar tells me that it's going to be a bounce, right? So, you know, if there are conflicting views when you're looking at correlation, right, that is where, you know, something is wrong with the market. You know, if you're a Star Wars fan, you know, it's called a disturbance in the force, right? You have some kind of disturbance in the force, you know, something is not right, okay? So this is how we get a high hit rate. You know, we look at things in tandem, all right? So as I've shared with you guys, right, and just to further drive home the point, of course, euro dollar, right, I just throw on the chart right over here. You notice that they move in opposite directions. One goes up, the other goes down, right? You can see one goes up over here, the other goes down, one goes down, the other goes up. So they move in opposite directions, is what we call negative correlation. Not only negative, but strongly negative correlation, right? So this just means that if I see a support level over here on DXY, dollar index, and it is very close to price, I should ideally be seeing the same thing on euro dollar. Just flip the whole thing around, like flip the charts upside down, which we are seeing, right? Which we are seeing, because when we go over, right, when we go over to euro dollar, we see a resistance. Price is close to resistance. Now, what I then look at is I look at dollar franc. I look at dollar franc, which also is moves in a negative correlation with DXY. So if positive correlation with DXY, negative correlation with euro dollar. Okay, so let's start look at this analysis. All right. So I like to scroll back, maybe go to the higher time frame to see if I miss any level. Yeah, am I missing any key level? Maybe this level over here, right? Yeah, but let me just go down to here first. All right, so I'm just gonna come here. It's a little bit hard to see when you're looking at this, right? Most people, when they look at this, they can't find the support, right? They are like, yeah, it's just a straight line up, man, right? Where is the support level over there? This is where you need to train your eyes, guys, and this separates a good trader from a great trader, or rather unprofitable from a profitable one. Okay, look very carefully. When I'm drawing the line, right, I draw it over here, and I'm going to zoom in for you guys over here. All right, can you see how my line, right, my line over here, it captures most of the wicks. All right, I'm gonna put it over, probably over here. It captures most of the wicks, right? Look at it over here. The way it captures the wicks, right? It captures all the wicks over here. It cuts through very nicely, right? The wicks, right? That is the key support level. I'll zoom out over here, right? I zoom out over here, and you can see, yeah, this is the support level. It's hard to see, but once you train your eyes to see it, you won't be able to unsee it, right? It's there we go. So this is what I call overlap support, right? Levels obeying from below and top. Then I begin. This is pretty clear that this will be my resistance, all right? The level where price broke out from. Okay, I might put it here, I might put it over here. Okay, but the important thing is I start to draw Fibonacci from the bottom to the top, and I try to fine tune things a bit. All right, okay, we got 61.8 retracement over here. All right, so I'm going to highlight this area over here as my support level. I highlight it in green. All right, I recommend, right, to use standard colors, right? Red for resistance, green for support, right? Anything that is below price is support. Anything that is above price is resistance, right? This is so that it trains your mind to I wouldn't say take shortcuts, but to see things more objectively, right? Don't start using blue and green and blue and yellow and orange and all the different colors, right? So your mind, when you're looking at a chart, right, at a glance, especially when you're toggling through, you're toggling through all the different charts, right? You then know, right, that it is a am I looking, is there more bearishness or more bullishness with this particular chart, right? So I love what Fabio mentioned, right? He's going even deeper when it comes to Fibonacci, right? This is my reverse Nike tick that comes all the way down to here, right? Fibonacci extension, right? 127, I trust him. Yep, 127 is right about here where the support level is, right? And the Fibonacci projection from here down to here and up to here. Up to here, right? You got the 78.6% projection that comes up to there. Nice bit of support level over here, actually. So you could even argue that the support level is just around this region. Okay, price is quickly approaching a very decent as Fibonacci confluence level. Right, so I don't want to highlight too much of it, right? But yeah, you could argue that this is a nice bit of support level, and once you have this in place, you then start to look at how different things are lining up, right? You got euro dollar approaching resistance, right? You got DXY approaching support, right? You got dollar franc approaching a nice little support area down here, right? In fact, a nice Fibonacci confluence area around here. Okay, so things are lining up quite nicely, right? Last thing I look at is maybe pound dollar. Not too big a fan of pound dollar, but it has been requested. So let me see. Probably this resistance level. I do like this resistance level. Nice little bounce, right? Nice bounces from here, nice bounces from there. Okay, so this is definitely a strong pullback level I'm looking at. It could even coincide with a support, right? No, I mean with a Fibonacci level. This would be the pullback. I'm sorry, this is the only pullback I see. Support level. Not too confident of putting something here, right? I'll probably just put this as a support level. So this would be the support level. This would be the resistance level, right? And then we fine tune it with a bit of Fibonacci, right? From here down to here. Okay, all fibs. Right on the bat, we got 50% over there. Right, so I'm going to leave 50%, I'm going to leave 61. You notice that I have all the different combinations of Fibonacci just saved right here. So I can easily just save 50%, in this case 50 and 61%. And you know, it's easy for me to continue my analysis. You need to make analysis easy for you. Okay, there could be it could be a Fibonacci projection here. Yep, the 100% just about lines up over there, right? Nice bit of a 100% projection that lines up over there. Okay, so yeah, it's we're approaching kind of resistance for pound dollar, for euro dollar, but I think DXY, dollar yen, and dollar franc are singing from the same tune a lot better. So with this in mind, then I have the confidence, right? I then have the confidence, right? 61's down here, a bit tricky. All right, I'll probably put this as my second support level. Some people use it for their stop loss, right? But I'll leave it up to you, right? I can't recommend trades, right? But I would probably use this as my second support level, right? To give it that little bit of breathing space, right? Second support over here. And I would be looking, right? I'll be looking at this case for a bounce from here up to here, right? A little bit of DXY strength for this week, right? Let me see. Yeah, we got 100% projection just about there. This is where we start becoming, yep, we got 78.6 projection just about here. So nice bit of Fibonacci confluence, I would argue, over here, right? Nice bit of confluence over here, right? Nice bit of confluence over here, right? So maybe for the second support, I have to leave it over here. I have to leave it over here, but ideally we see a bounce from the first support. Nice bit of overlap and confluence levels, right? To take prices to the first resistance, which means that we should have a drop on euro dollar, right? We should have a drop on euro dollar. Let me do a little bit of Fibonacci confluence also. I don't think so, not from 100%. It's already crossing 100%. But it is approaching the 78.6 Fibonacci projection over here. So nice bit of confluence, 78.6 Fibonacci projection, 61.8 retracement, and a nice overlap, right? So I would be shorting euro dollar, right, for it to drop back down to the first support level. My personal view, of course, right? So do your own due diligence, guys, right? 61.78. Oh man, the other fib level is too far away. All right, but if you have to find another level, right, a second resistance, probably can put it over here, right? But personally for me, my style of trading is that if this is my trade, my stop loss, right, would just be slightly above here. Just give it that much breathing space, right? I won't put my stop loss so far away because it affects your risk to reward. I just put it slightly above, right? So yeah, but in terms of levels, I guess if you have to pick a level, right, you probably could pick this level. Not that great, actually, not a great level. Yeah, not a great level, but yeah, there'll probably be a second resistance to play the move down, which means that we're playing a bounce on dollar franc, right? So, oh man, it's so tricky. Dollar franc is not that clear because we're pretty constrained. It's hard for me to call a bounce over here, right? Because the move is so small, right? It's a bit hard for me to call a bounce over here, right? But maybe, yeah, maybe from here you can start looking to skill in on the trades for the bounce over here to the first resistance. It's honestly a little bit hard for me to trade. Currency strength meter in correlation analysis. Very interesting. I know this thing that people use called the currency strength indicator, but I feel it's a little bit too lagging, right? I would encourage you to use pure correlation analysis instead, right? Which is like this. Currency strength, it's kind of shows you how each currency has been performing, right? In the recently, but it's not a good indication. It's a little bit different from correlation. Yeah, so I would not use it, right? For correlation analysis, I would use the correlation coefficient, right? Over here, you click on this thing. There's this thing called correlation coefficient. I would use this instead, right? Like this one over here. I would use this instead when it comes to analyzing the strength of correlation. You notice that if a value is close to -1, right, it means that it's strongly negative. It's close to +1 means it's strongly positive, right? So in this case, you can see how euro dollar and DXY are very strongly negatively correlated. Look how closely they are to -1. All right, so I would focus on the correlation coefficient. How does it look like if something is not correlated, right? You can just throw up something like a Euro GBP maybe, right? And you notice that, see, if something's not correlated, it just moves up and down all the time. But if something's correlated, it tends to stick to the negative region or -1, +1 a lot. All right, just to show you one that dollar franc is strong, but not super duper strong. But yeah, if you don't throw dollar franc in here, notice that it tends to be in the high negatives, right? But never always, it doesn't cross over to the positive region that much. It always tends to be like highly negative over here, right? So there we go, right? That is how the correlation coefficient kind of works. But yeah, I will use correlation coefficient, not so much of a currency strength meter. Okay, yeah, so I'll be playing this drop on that dollar franc. You probably can play the bounce from here, right? Probably can play the bounce from here. This could be your second support level, right? Then when it comes to pound dollar, right, the move that we can expect on pound dollar, I wouldn't be looking to buy so much over here. I'll be looking to sell, right? I'll be looking to sell to play the move from here, right? Probably down to here, right, for pound dollar. Okay, and right, this will be my second resistance where the major 61.8 retracement is, right? I'll be playing the move down from here. Yep, nothing much over there. Now let's look at dollar yen, right? Well, it worked out nicely. We price reverse off the major high, dropped off first support target, right? I'm still a little bit wary that there's a major 100% Fibonacci projection there, right? But I guess we should be looking at this, right? That given if price does break this first support, I would kind of be looking for it to drop down to this, to form a little bit of like, it's a bad excuse of a double top, very, very small double top, right? If you look at it over here, right? It looks like a bit of a double top kind of formation over here, right? Looks like a double top formation, right? But I'll be looking for it to break that, to trigger the move down to the major 23 points. This is the 23% Fibonacci retracement about here, right? I'm watching for this level to happen first. Okay, so that is my view on, I would call this maybe downside confirmation, and if it breaks that, right, it should drop quite nicely to the first support down here. Okay, we do have, let me just take a look at dollar CAD. Wow. still within the channel. We can agree that it's still within the channel quite nicely. That part is working out. But wow, I have no idea, man. There isn't a nice, sorry, there isn't a nice level for me to trade this. It's a little bit difficult. I could argue that the first support has been kind of shifted to there, second support kind of shifted to here. But yeah, ideally, right, you got a nice bit of Ichimoku cloud over here, so you could be seeing like price kind of inching upwards towards the first resistance again. You got a bullish channel momentum, you got bullish Ichimoku cloud momentum, right? So it could, you know, give you enough of that momentum to push prices up to first resistance, but not too confident of this kind of setup, right? This is dollar CAD. We now look at Aussie dollar. Very nice overlap resistance that we're seeing, right? I'm just going to highlight to you guys again, right? Notice that when I draw a resistance level, right, I see how far back I can drag it, right? I can get it here, right? I can get it over here. Nice swing high resistance. This becomes a pullback resistance, right? Overlap, and I can even drag it back to here, right? Maybe up to here, right? Where price really broke out strongly, right? So I can drag it as far back to here. So this is my major resistance level, right? My major support level, I don't put this as my major support. I kind of move it all the way up to here, right? This would be my major support level, right? Just give me a second. I need to turn something off. Give me a quick second. Okay, I'm back, guys. All right, sorry about that. Yeah, so I got a big resistance over here. I got a decent support level, and I got another big resistance. I got another big resistance all the way up here. All right, so this is where it gets tricky. If so when you are looking at it right this way, right, you're looking and you're wondering, man, we are a big resistance, price is right there, should I be, you know, forecasting a drop or should I be forecasting a rise, right? This is where correlation also comes in, right? So first things first, right, what are we expecting on Aussie? We're expecting dollar strength. So if there's dollar strength, it means that Aussie dollar should naturally at least, you know, drop. But what is equally important is to look at Kiwi dollar first, right? To look at Kiwi dollar because it's positively correlated with Aussie dollar. And this gives me an idea on what we can expect. So with Kiwi dollar, what I do notice is that, okay, we got a resistance here. I drag it back to here, makes sense. Drag it back to here, makes sense. Drag it back to here, right? This becomes an overlap, right? So I got a nice bit of first resistance level over here, which price is reversing from, okay? In terms of the support level, most people might think it's over here. Some people might even put it over here. But if you train your eyes, right? If you train your eyes, you notice that the support level is actually, right? The support level is actually over here, right? It's actually a very nice level that captures the wicks, right? Captures the wicks, and captures the wicks, as you can see over here, right? So this is the support level, right? Based on what I'm seeing over here, right, and how there's a little bit of a reversal already, right, I'm a little bit more confident that, you know, we could see Kiwi dollar weakness, to push prices down to here, right? Which means that Aussie dollar ideally, right, should be seeing a bit of a reversal, right? Aussie dollar should be seeing a bit of a reversal to take prices down. If you're feeling a little bit less confident, you can put it, this would probably be the intermediate support level, right? You can play it down to first, right? So this would be my first resistance. Wow, that means it's a pretty big trade right away, man. A little bit nervous, right? Because there's a little bit of breathing space for DXY technically. Not much breathing space, yeah. So The risk that is it might reverse from here instead, but it's a lot of resistance over here. Let us see, right? Ichimoku, right, looks like it's trying to break out, and a very very important level which I need to look at is this thing called a RSI. Very very important, right? Is that there's that little bit of a bearish divergence that we're seeing over here, right? Price is making a higher high, RSI is making a lower high, so we've got bearish divergence there. At a key level, that's usually a good indication that a reversal is likely to happen, right? So definitely one of the key things I'm looking at, Aussie dollar playing the reversal, right, from this major level. Okay, now I do want to, that's right. Let's go on to WTI oil, crude oil, right? Called the sell entry, dropped very nicely, made some good money, right? Hope you guys made some money there, right? But what can we expect from oil? Wow, it's tough, man. Man. Well, nice clear bit of resistance over here, without a doubt. Nice bit of resistance over here. Probably been a support level over here. Can't really tell if this will be a 78.6% retreat. Yep, it's just there. 78.6%. I like it when I get the exact level. Yeah, when I'm guessing, right? So, I mean, when I'm eyeballing. So, oil a little bit hard, right? It's a little bit hard for me. Hard to call the move for oil. You could argue there's a bit of a very strong descending trend line over here. You can see it a lot more, you know, on the 4-hour charts. Nice bit of a descending trend line. Some might even argue it could be a bit of a channel, right? It could be a bit of a channel over there too, right? But yeah, a fair bit of descending resistance level over there. Okay, price, if you ask me, is right smack in the middle, right? Price is right smack in the middle. It's not, you know, it's far from resistance, it's far from support. I can't call a move on this, right? So personally, for me, it's a little bit choppy, a bit hard to trade. You know, if no one's forcing you to trade, maybe I don't need to trade it. Okay. So one thing I guess is a goal, right? You take a look at goal, right? This was downside confirmation, so this is why it's very important to use downside confirmation, right? Is that if price broke this level, it would trigger the move down. So it didn't break the level, it didn't trigger our move down, right? So I'm glad it worked out nicely that way, right? Because that's what downside confirmation is, okay? But what can we expect for the for gold? A bit of support level over there. You could argue there's a bit of a resistance level over here too. A bit hard for me to call the move on the goal, but it's a little bit hard to see. But I do notice that this overlap, you know, very nice. You know, it captures many of the levels, right? And even though it looks like it broke out from here, it actually cuts through the key wicks very very nicely. Even what we're seeing over here, right? So if I could, right, I might be looking at a short-term reversal for price to come down to here for gold, right? Pretty simple move, right? On gold, all right. Dow Jones, right on the key overlap, right? Very very straightforward, major overlap resistance, right? You could argue that even goes as far back as this major spike over here, right? So but what I'm always worried is that this spike might not be consistent with the price feed of different brokers, right? So using this could be a good enough level, right? Major resistance level, which probably coincides with the 78.6% retracement, as we can see over here, is right on the 78.6% retracement, right? Recent reversal, you probably can draw it just about over here. This would probably be where the support level is, right? Nice little bit of overlap. And you know, we could play the reversal down to here, right? Just about enough, right? Playing the reversal from first resistance to first support, right? This could be a 161.8 Fibonacci extension. Nope, sorry, it's a 145. Is it 145 or 141? Yeah, it's a 145% Fibonacci extension. Nice bit of resistance there. So yeah, hopefully you can see a reversal on Dow Jones. The DAX, what can we expect on the DAX? Also a nice bit of resistance that we're seeing over here, right? Nice bit of first resistance. Did I change it correctly? Yep, correct. Yeah, so the DAX, same thing, you know, very nice reversal. This is probably not a 78, might be a 61, might be slightly above a 61.8 retracement, right? It's quite above the 61.8 retracement, slightly below the 78.6 retracement. Yeah, so nice bit of resistance over here. Probably can call a reversal, and if I were to call a reversal, this would be my support level, right, on this, right? Notice how very nice overlap support level over here, right? So yeah, price is likely to kind of reverse from here down to here. Of course, do your own due diligence, guys, but yeah, you know, we could be seeing a nice bit of reversal on the DAX over here. Last one, S&P 500, right? S&P 500, oh man, it's not as clear, right? Bit of resistance over here, but it's not as clear compared to the rest, right? Yeah, not as clear as compared to the rest. Second resistance while calling the move down, right, to the first support over here. All right, nice bit of indices recovery we're seeing. I think a lot of it is driven because I think that interest rate hikes are about done, right? But yeah, you should probably be seeing something simple in the S&P 500. We had a request for Euro Yen, right? So I'm just going to take a look at Euro Yen before you head off, all right? Wow, why do you ask me to look at Euro Yen? There is nothing to look at for Euro Yen, man. Dude, there's a support level over here, but that's about it, right? There's hard to look at anything else for Euro Yen, man. Maybe a projection? No, that's I'm sorry, there's nothing to really look at Euro Yen. Maybe to buy on weakness, right? So look who we have over here with us. We have the original cat. Leia the cat. So I should just walked in front of my camera, right? So yep. We have the bit of probably the only thing to do for this Euro Yen pair is to buy on weakness. All right. So look for price to kind of drop a bit before playing the bounce. So you never want to try to catch the move coming down, but you probably can try to, like, you know, play the bounces, right? Play the bounces, right? So very clear strength that we're seeing on Euro Yen. Nice bit of ascending support, right? Nice bit of bullish momentum. So kind of like just buy on weakness to play prices all the way up. Personally, for me, one of the key setups that I'm looking at is Euro Franc. I'm actually short on Euro Franc now. I hope it does work out, but very nice 38% retracement, very nice overlap resistance over here. So I'm looking at this, right? Yeah, I'm looking at this to play the reversal, 38. Right, very nice overlap resistance over here, right? Playing the reversal. You could argue that the move might have happened already, but I do think we could see, especially if we are seeing Euro weakness, which is what we're forecasting, right? We could even see a big move all the way down to here for Euro Franc, right? So this will be one of the key things I'm looking at. Okay, guys? But yeah, I do like Euro Franc quite a bit. Okay, That's it for me. Oh wait, so we got Aussie Kiwi from Watson. Last one, Aussie Kiwi. Bit of resistance. I previously highlighted a bit of resistance about over here. A bit of resistance over here. So this hasn't changed, right? It reversed from this resistance quite nicely previously, right? Probably look to play the reversal from here, right? Yeah, probably look to play the reversal from there. And with this being the second resistance all the way up here, right? A bit hard to call a trade, but I do think this overlap resistance is quite strong. So, you know, we could even see a smaller reversal down to here for the first resistance, right? It does look quite nice. I do agree, right? I do agree, but the only danger is that the move already happened, right? The move already happened for a reversal from here to here, right? So it's a bit tricky if it comes back up to here again, okay? All right, guys, thank you very much. Thank you, Philip, right? Thank you guys for staying throughout today's session. If you found it useful, please help me leave a thumbs up. The YouTube algorithm really likes it, right? So yeah, help me smash that thumbs up button if you found it useful. Otherwise, thank you so much for staying with me throughout today's session, right? It's nice for you guys to tune in. You know, if you're in, you know, Adelaide, right? It's about what, 7 a.m. or 8 a.m. when you tuned in, right? In Europe, it's about 8 p.m. 7 or 8 a.m., right? And if in Europe, it's about 7 or 8 p.m., right? Thanks for tuning in for today's session, right? It's an honor to have you guys with me, right? To start off your week. And I wish you guys that, you know, this will be a profitable week, right? If you're with me, you know most of the time it is, right? But yeah, you never know if it's not, right? So thank you for staying with me throughout today's session, right? Stay safe, trade safe, right? And I'll catch you guys next week again, all right? Peace out, guys. Peace out, right? I think we did the analysis on gold already. So if you haven't seen the analysis on gold, just scroll back, right? You're able to rewind a bit, right? To see the analysis on gold, all right? Probably a short-term reversal that we're looking at over here, okay? Stay safe, trade safe, and peace out, guys. See you guys. Bye-bye.